Hey guys, welcome back. And in today's video, we're going to talk about Google Cloud and cybersecurity and what they're doing overall to strengthen their cloud position when they have fierce competition within Amazon and Microsoft. So let's get right into it. Big tech's price action has been quite turbulent over the past few years, where we saw a pandemic, overhiring, significant drops, and rallies for the top technology companies in the world, including but not limited to Google, Apple, Microsoft, Meta, Amazon, and Nvidia. One of the fastest growing parts within a lot of these companies is their cloud services, specifically Google's GCP, Amazon's AWS, and Microsoft's Azure. While Nvidia powers most of their capabilities with their GPUs and H100s, Amazon, Microsoft, and Google are all hard at work trying to replace their reliance on Nvidia behind the scenes. And the reason cloud computing is growing so rapidly is because it is truly more efficient for many companies, especially smaller and medium-sized ones, to move their workload to the cloud, rather than having to employ their own IT department, update their hardware, and maintain and operate their own server farms. Having your own on-site servers can be a massive headache and a large capital expenditure for many companies that they just can't justify it to their shareholders. And as Nvidia has been selling more of their GPUs at over an 800% markup, literally 823% markup, as the hardware costs around $3,320 to make, and they sell it anywhere from $25,000 to $30,000. This makes the consumers of this computing power look for any cheaper alternative they can find, or, in this case, create. Now, Google's cloud unit, GCP, has increased by 28% year over year during the second quarter of 2023, while Amazon's AWS is still growing in the high single digits, and Azure is growing similarly to Google at 27%. With Amazon being the biggest player by a wide margin, you should expect to see smaller growth in the cloud space. However, with Google being the smallest player by far, it is odd to see Azure and GCP still growing at similar rates. This could be due to many reasons, but the most likely reason seems to be that Microsoft is able to leverage their current existing software and suite of services and bundle their cloud services with that as well. And since Microsoft has a far better relationship with businesses and selling business to business than Google does, they do have a strong advantage in that category. And that may be why Google seems to be falling behind in growth rates when compared to Azure's bigger size. Now, although Amazon and Microsoft have clearly outperformed Google in terms of cloud success so far, that could change quickly as AI has taken the center stage, with new developments threatening to change the way applications are built, especially in the cloud. And the reason I'm focusing on Google right now is that Google seems to be the only one that does not benefit from a slightly stretched valuation at this point. Now, Google's stock may be suppressed for many other reasons, and it could be that the US is trying to regulate them and show that they are anti-competition and a monopoly, but we will see how that turns out, and I'm not sure if that's exactly why the stock seems to be suppressed when compared to its peers. Although I do like Microsoft and Amazon in the longer term, I do think that they have had quite a run-up in the shorter term, while Google has stayed somewhat depressed because of Microsoft's ChatGPT, while Google had a lackluster response with their Bard chatbot. With Google below its 5-year average for its price-to-free cash flow and forward PE, I think that this may be an attractive time to get into a great company, with large tailwinds behind it, from YouTube, cloud computing, their own Android services and Google Play Store, and a dominant advertising business. Looking at the graph above, we can see that the vast majority of their revenue comes from their core search business, while only slightly more than 10% of their revenue comes from GCP. Although it makes up a smaller portion of their revenue, it's important to note that the cloud business is just now becoming profitable in the past few quarters. As they continue to grow their cloud business, we will see the margins on the overall business improve as a new business segment generates meaningful profits. Not only will their cloud segment boost earnings, but with Google laying off a massive number of employees over the past year, we will see all of the severance packages and the rest of the fees fall to lower levels, which will also boost their profitability over the coming years. Now, Google also trades at a discount to the S&P 500 currently, at approximately 17 forward price-to-free cash flow, while the S&P trades at a 20 forward price-to-free cash flow. This means that investors believe it deserves a lower multiple than the S&P, which I believe is mispricing, as I think most investors are exaggerating the effects that ChatGPT has on Google's business. Google is a superior company compared to the average business within the S&P 500, and that's why I believe it is an attractive investment at a price cheaper than the S&P 500. Now, they've also been making big steps in cybersecurity. Cybersecurity has been a hot topic over the past decade, with a lot of news around attacks on critical infrastructure and potential election interference on social media. Now, Google, along with others, understands that cybersecurity will be an important industry, and a fast-growing one at that, for the next few decades to come. And I believe they are poised to take advantage of this growing market, especially within their cloud unit. And the reason I think this is because in 2022, Google acquired a company called Mandiant, which provides various types of cybersecurity products and services to both public and private institutions. Since then, they have integrated their cybersecurity resources not only into their own infrastructure internally at Google, but also added them to their cloud offerings to enhance security within their cloud computing business. Now, although Google is not the only cloud computing company focused on security in the cloud, with Microsoft's Azure and Amazon's AWS placing heavy emphasis on security, it is something that many investors overlook when considering what future investments they can make to take advantage of this growing cybersecurity market. The growth in cybersecurity is projected to be over 13.8% into 2030, according to the research by Evolve ETFs. Now, this could indicate significant growth for cloud providers that are expanding in their security offerings. It's also important to consider that the threat of cyber attacks is only increasing, which may create even more demand than is expected currently. As companies move their workload from on-premise to the cloud to benefit from the multiple advantages that it offers, there will be increased demand from that part of the market as well. And when I'm considering all of these different S-curves aligning toward growth in cloud and security spending, cloud companies are sure to generate substantial shareholder value for their investors over the course of the next few decades. Thank you for watching, and if you disagree or agree, let me know what you think down in the comments section, because who knows if it'll be CrowdStrike or Amazon or Palo Alto Networks or Microsoft who will take advantage of this cloud spending and the security spending as well. And that's all I have for you in this one. I'll see you in the next one.